Hi, uh, we are from Capital Pi Investment Advisors and Research, and our primary objective is to understand the asset classes and how they are behaving. As of now, on 15th of December 2014, when commodity prices are falling and Brent is going down to hell, we are taking a cursory glance on one of a asset class which is often envied for its understanding among the best of the economists and other financial players. It's gold. So we have given a topic, and this is the part one of the series. It is about a golden story of gold. So as you can see the chart from here, it is from 1997, and you can't see much of the difference in the chart because the whole price movement was limited between $300 to $200 and precisely sometimes spikes at $400. But as we know that the mother of all bull market in every single asset class started from 2003 roughly, and when I am saying figures, it is a bit of an approximation because we are looking for a 10-12 years period to understand the prices. So it started from 2003 with the price somewhere in the range of 300, and when the prices started, it was kind of a bull market. And here you can see that this particular moving average is 50 weeks moving average, which I generally follow to make things simple, and the prices were largely over this particular average, and somewhere in this region it peaked to $700, and this was somewhere around 15th of May 2006. So this particular peak occurred in May 2006, and prices then had a fall somewhere in the region of $500, and it struggled time and again, and up till the time of August 2007, when it has got a clean breakout over this period and the prices moved to $100. So this was a breakout, and this was particularly a resistance. So to keep things simple, the bull market started somewhere in 2002-2003 from the region of $300. That is the first point. From $300, the journey was to $700, which was precisely more than double, and it was achieved somewhere in 3 years. So it was okay kind of a bull market, and then was the first leg of the bull market, which was very mature. Prices had their, what you can say, doubling effects, and prices then gave out. The prices, there was a pull down, and then the prices were in a kind of a range. From this range, somewhere around in August 2007, prices had a breakout from $700 to $100. So this was precisely a very okay kind of thing. Then something really good started out, as very nicely said, and it is one of the most simple golden rule to understand a trend. And the trend is a place where you can make a lot of money. And when somebody says that you require to become rich, real good bull market, and the only thing that you are left with is your understanding of how it is all get created. So in this simple video, we are trying to really narrate the story and trying to lay down the principles that actually are helpful in understanding what the trend is all about. And if the trend is very clear and sustainable, you can make a lot of money. So the first thing is that in a bull market, if any asset is in a bull market, a previous resistance, that means here, turns out into a support. So generally how it happens, I will explain it to you. Generally the prices moves up. You never know whether prices are going to be moving higher or lower, but then it has already occurred. So you can understand that this was a resistance. Prices come up, they don't cross it, and so it becomes a known resistance, and finally you have a breakout. So this becomes a resistance as a breakout. The prices move upward, it was clear, and then the prices moves down. So this particular resistance becomes support is the first condition for a bull market to move into a next phase. Obviously the bull market all started from here, since the prices, as in the hindsight, it is very clear that the prices started moving, but you never knew that what was the cause of it. But here, when you had one resistance, a very known resistance, turning out into a support, you have to be cautious. That's the first rule. That's the first rule. Prices were always moving, so they were in a kind of a bull market. Understand it. Prices were always moving. So sometimes people say that you can't actually time the market. To a larger extent, they are right, But then you can try to time the market and you doesn't get a handful of what you people say that okay, somebody who tries to really time the market gets nothing but a handful of, I can't say it in the video, but then you have to take your own chances, and somebody who take their own chances actually gets a beautiful reward. So the trend was up, was very clearly known. Prices moved to a peak, they had a range bound movement, and then they had a breakout. So the first sign that this is something meaningful, more than a bull market in the offing. The offing was already there. The bull market was hopefully 4 or 5 years old, and for a particular asset class, this was quite a feat. But then you have to remember what we are talking here. In 2003, the gold prices actually had a bear market right from 1982 to 2002 to after a 20 years bear market. You can look forward for a first leg of a bull market, and that was all here. So here was the first sign that you can see that things are moving on. The beautiful thing happened here again. The second thing, there was some kind of pattern that has emerged here. This pattern is the inverse head and shoulder, which I will show you in the second slide, and this is the second slide. So if you really want that, so this was resistance, this turned out into support, and this particular region, again see, this particular region was emerging as some kind of a consolidation, and that consolidation in the parlance of technical analysis is known as inverse head and shoulder, which was geometrically very symmetric. So you can understand that if something is geometrically very symmetric, it has got a higher probability, or it has got a higher chance to really have a nice beautiful breakout in the direction that the pattern is suggesting. So here you had your breakout. The minimum target was around $300, so if around 1000, which was, this was a neckline, this particular thing is a neckline, these are two shoulders and a head. So you had a target of somewhere around 1300, which actually was nicely achieved, and the price had a breakout, the prices had a breakout, and they actually got rested in the region of 1200, and there was a pullback. And see again the beauty, this pullback was again arrested at the previous resistance, which finally became a support. Now you have two support points. You have a rising prices, that means you have a bull market out there in the offing, which is again supported by this hypothesis, and again that hypothesis gets repeated here. And what you can do is to draw a very credible trend line from this particular point and from this particular point, and what you have a beautiful trend line, and the prices following out there. So you have, and this is a 45-degree trend line, which again shows that you have a what you can say inverted head and shoulders, geometrically stable. You have got a trend line, prices moving out. So what we have seen here is that the prices have moved has gone up based on this trend line. And what we are finding very important thing, that the moving average that I follow, the prices were crisscrossing over here, but finally they took a support over here in the particular region, and the prices had a breakout. And after that, and this all happened, I will give you the timelines, that this was October 2008, when whole global financial crisis was playing out, and this particular asset class was also not spared. And this, from here, the prices had a breakout, and the prices moved. QE was announced in somewhere around this region, and because of the QE, the first thing that people saw, that a lot of money will be printed and the inflation is at the offing. And obviously the gold is the biggest inflation buster. The theories abound. Theories actually are much more, what you can say, stronger than the prices, and so prices literally followed, and those guys who believed in this theory started buying out this particular asset class called gold, and the prices started moving higher. So from October 2008 till around September 2011, so that means around 3 years, the prices had a great move, and finally it got busted out here. So we will look into the part 2 of that busting. Thank you very much.